Because what I've found with bullish divergence, sometimes if you take the D1 trade with the bullish divergence and you've not allowed it to test the 800 EMA or at least break the 800 EMA, 9 times out of 10 it might come lower and the divergence might be still building. So it's really important for you to be patient when you are trading the D1, because divergence can build over time. You need to make sure that you're using the divergence as your advantage to come higher. So as we know with divergence, obviously it shows when bullish divergence is when price is coming lower. As you can see, it's come within a downtrend here. But the TDI, which is the Traders Dynamic Index, this is the indicator that I use as well. As you can see, price is coming higher if you follow the TDI trend there. So it's when price comes lower, but the TDI is saying that price is going to come higher. That's what bullish divergence is. So it's when the market basically presents a setup when price is going out of your favour. So you're able to rely on the TDI. That will be able to give you a much more reliable representation with what's actually going to go on going forward. Do you measure divergence from the wicks or the body? Body, always. It's really important. I think wicks as well. I'd only sort of consider the wicks when I look at sort of key levels, so key support and resistance levels, but I always use sort of the closure when drawing my divergence. Some people might disagree or agree, but I just like using sort of the strong bodies. I think it's a lot more accurate to go off, especially when you're drawing the divergence. So you've got your A, B and C setups. So A being the most probable. There's not much wrong with it. If not, anything's wrong with it. Everything fits with your plan. I'd probably risk anywhere between 1.5 and 2% on the A setups, just because of how confident I am going off my back testing. And then with the B setups, I'd trade anywhere between 1 to 1.5%. I'd always take the knock in consideration. So whatever's wrong with the trade, I identify that as a knock. So something that is a negative impact on what I'm going to trade against. So something that I don't agree with or something that could be better. So it depends on what that knock would be. Usually if it's a knock that's quite considerable, such as like a swap in liquid 50 or divergence on the 15-minute against the direction that I want to trade, then I'd consider sort of risking 1% for that. If it's a case of being in the Asian range, I would sometimes risk up to 1.5%, especially with the D1s, because I've found D1s can move within the Asian range. With A1s, I would like to size down to 1% because probability with A1s on the 15-minute, if it's not broken the Asian range, sometimes it can come back. Price can come back, retest the 50. And then come back lower, and that could potentially stop you out of a position. So that's why I'd only risk 1% when it is an A1 15-minute candle. And then with the C setups is something that I'm going to be a lot more confident with as well. So I took 2 C setups last week, both winners, and I just feel like I need to be a lot more confident with that. So I'll be risking about anywhere between 0.25 to 0.5% with them. And again, depending on the knock, depends on how much I risk. So once I get this set up as well, once I trade an A, B and C setup, I'll be able to show you exactly what I mean and how I go in there and risk what's needed to be risked.